This video is sponsored by my Patreon. Check the link down below or go to StockSurfest.com/Patreon and join. You get all my buy, sells, call-outs, morning update videos, plus more. Check the link down below. Join now. Let's get into the video. So the stock market doesn't look like it's closing on a good note today, guys. It's currently 3:36 p.m. on the East Coast, and we have the S&P 500 down a whopping 1.7%. We have the Russell down 2.5%. We have the NASDAQ down 2.3%, as we have the Dow Jones down 1.5%, and the VIX up over 18%, which is nuts. So we got to break it down in this video, talk about some stocks, break down some charts, and we have to go over my thoughts on the market. So hit the like button, subscribe if you guys find value, and make sure to get your $50 free from M1 Finance and your 2 stocks from Webull. All of that is linked down below, and let's get right into the video. So like we talked about in my previous video today, the head and shoulders on SPY is playing out, and pretty much nothing has changed from that previous video. We collapsed under 460. We're now trading at 465. And if I pull up the intraday chart, I guess one thing that did change is the fact that we had a relief rally from about 455.46 to about 459. So this did rally about $2-3. And now we're falling again. That's pretty much it. You know, we had that rally. We broke out of the moving averages momentarily, but then the rally didn't have legs. We got rejected at 459. Now we're trading at 456.50. We're back under the moving averages on this intraday chart. And if we take out the lows heading into close, guys, as we do have about 23 minutes left in the session, that is not going to be good whatsoever. So keep your eyes on more weakness potentially when it comes to SPY, and Triple Q is not looking good either, guys. Let's be honest. Both of these are looking very ugly. Triple Q is right around the lows from last week right now. Those are at about 369.30. We're now trading at 370.98, which is actually lower from where we were when I filmed my previous video. So at this point, I think this will take the lows out. We probably will go to 365, maybe even 355 if things really start getting ugly. So today, it just wasn't a great day. Volatility's through the roof. The bond yields are going up like we talked about in my recent video. The 2-year and the 10-year yields are at almost 2-year highs, maybe at 2-year highs. So they're crushing it. Stocks are down. Growth stocks are getting destroyed. So what has been happening is just continuing, guys. It's simply continuing. So let me know your thoughts down below in the comments. Smash that like button. Make sure to subscribe as well. If you guys are finding value in my videos and want to see more videos, it really helps me out if you do that. Hit the like button and subscribe. And let's talk about some stocks now. We had Goldman Sachs report earnings this morning, ticker symbol GS, and this is it's not doing well, guys. In fact, it is seeing the largest percent decrease since June 2020. The stock is down 6.8% right now, and that's after seeing a bit of a relief rally. This was down way more earlier in the day. This hit 347 this morning. Now it's sitting at 355. So at one point it was down almost 9%. So we are seeing a bit of a relief rally. And overall, if I pull up this 4-hour chart, it's pretty oversold now, even with the little relief rally that we've seen. So maybe we do get some sort of bounce back in the short term here, maybe to 370, maybe 365. But then again, when you look at the earnings, and the earnings were not that great, maybe we do end up going a bit lower. EPS came in at $10.81 versus $11.73. So that missed by almost a whole dollar. And we had revenue come in, which actually beat. Revenue beat $12.64 billion versus $12.01 billion estimated. And get this, guys, trading revenue, which is trading stocks, what we talk about here on the channel, was $3.99 billion for the quarter, which is down 7% from the previous year. And trading revenue for JP Morgan was down 11%. And Citigroup saw a 17% decrease year over year. So it seems like after that crazy year and a half in the stock market that we saw throughout the pandemic over the past 2 years. It seems like as the revenue spiked during that time period, now they're obviously decreasing, and that makes sense. It's not going to be elevated like that forever. Could it get back to that point? Sure, but there's ups, there's downs, and we're seeing a bit of a down right now when it comes to that trend. So that's a little bit of info on Goldman Sachs. The stock, again, is down 7%. We shall see if we do get a continuation of this little relief rally. If we do, we'll see. If we don't, we'll see. Let me know your thoughts down below in the comments. And we have IBKR, which is Interactive Brokers. They report after market hours, which I just realized is 3:40 p.m. So we're not going to be able to cover their earnings in this video, which is a bummer. But they do report in about 30 minutes from now. So we will see if this does rip, if it sells more. I mean, currently it's down 3.5% just today, and over the past couple of weeks, it is down about 14% from $82. Now it's sitting at $72. So it's pretty oversold. It's more on the oversold side on the 4-hour chart here when it comes to the RSI. So let's see what they report. That's pretty much it. I mean, we're going to see some volatility like we've seen the past couple of days, and the earnings is going to increase that volatility. We shall see. So IBKR, keep an eye on it. And look at these industrial plays, guys. Caterpillar has been freaking on fire. I mean, we called this thing out a couple of videos ago, maybe a week or two ago. And since then, I mean, it's up a whopping 8 to 10%, maybe even more, as we've been seeing this rotation out of growth for the past couple of months, and it's only continuing, right? We've seen this rotation, and stocks like Caterpillar are just crushing it. I mean, over the past couple of weeks, it's gone up from 190 now to 230. It's up 20%, which is insane. And I spotted this overall. Look at this beautiful inverse head and shoulders on the 4-hour chart. We have the left shoulder, the head, the right shoulder, and if you read this chart correctly, this right shoulder completes anywhere from 245 to 250, probably more like 240 to 245, which gives it another $10, maybe $15 per share upside from where we are right now. So Caterpillar, I like it. It could potentially pull back just a little bit in the short term, but overall, over the next couple of weeks, month, 2 months, I see it going higher, maybe 240, 250, like I said. So that's Caterpillar. And another one, I guess you can say a competitor to Caterpillar, is Honeywell. This went down today. It's currently down. The markets aren't closed yet, guys. This one's currently down 1.7%. And you guys can see it's still well within this new channel that it's been trading in for the past couple of weeks. We're just simply, or past couple of days actually, we're just simply pulling back within the channel. So you guys can see we broke 210. That was a big resistance. And we broke to this new channel between 210 and 230. So we got to about 220. We got overbought. Now we're pulling back towards the bottom of the channel again, and we're also testing the moving averages, which, mind you, I'm actually seeing a golden cross here. So if buyers step in between 210, 212, we are seeing consolidation right now, right around 212, and buyers are stepping in. So if this little relief rally on the intraday chart continues, this might end up going back 220, maybe even higher. I think it could end up going maybe 230, maybe even higher than 230. So watch out for Caterpillar and Honeywell, ticker symbol CAT and ticker symbol HON. We also have Verizon. Verizon's been doing pretty well. Ticker symbol VZ. Let's pop that up and see what's going on here. Verizon's been doing pretty well after a multi-month downtrend. You guys can see this thing was $60 back in May, and it went all the way to $50 in December, which isn't that crazy of a drop. I mean, it's 15-16%. It's not a crash by any means. It's not a crash, but it's a pretty decent sell-off, and it just kept bleeding inch by inch, little by little each day. It bled 15% in 7 months, which is a slow way to go down, right? And now it's been ripping back up. You guys can see we hit 50. Now we're trading back above 53. We're actually breaking out of the moving averages. We're seeing a golden cross. And just in the past couple of days, we've seen a mini pullback. Look at this on the 4-hour. We've gone down from 54.60. Now we're trading at 53.40. And we're already seeing buyers stepping in right around this trend line to push this thing back up. So I think in the short term, Verizon could be going back to $55, giving it about $1.50, $1.60 upside at minimum, in my opinion. And I think this thing has legs above 55. I'll be honest. I think we could break 55, which is the next main resistance, not only from a couple of days ago, but also from months ago back in early October. So I think Verizon, if it takes 55 out, this ascending triangle is going to play out, and there's going to be a lot more upside from there. So I'm going to put my alert. Let me do 2 on this one. I'll do one at $53.50. Then let me create another one. We'll do it at $55. So let's keep an eye on this one. Ticker symbol VZ. Another one that I talk about all the time on this channel, I feel like, is Applied Materials. This one's down a lot today. It's down 9%. It's down to $152 again, and it's currently down about $16 from the recent all-time high. If I zoom in a bit, you guys can see we just hit 168 last trading day, and now we're down a whole 10% from that point. So it's in correction territory now, not in bear market yet, but we're in correction territory. We're right by the 180 moving average, and we're getting towards the bottom of this. Let's see if this channel looks good here. Let me draw it out. Yeah, we're getting towards the bottom of the channel. So I think buyers will step in between, let's say, 148 and 150 to maybe 152. So there is going to be, in my opinion, probably more volatility over the next couple of days. But I do see buyers stepping in that little $3-4 window right around here. And sure, I could be wrong. Buyers might not step in. This thing might collapse. I've been wrong in the past. And that's why stop losses are a thing, right? That's why, you have to watch the trend, because if it does collapse under 148, 147, low 140s, that's not going to be good at all. But as long as we hold 148, 150, this one is in play. And the last one is Johnson & Johnson, ticker symbol JNJ. What I want to point out on this one is, I believe on the yearly chart, we can see, actually, let's go back to that 3-year chart. We can see clearly that this is trading in an uptrending channel. Very obvious, right? It went from 180 down to about 160 recently. We double bottomed there, and we've since been breaking out for the past couple of weeks. And now we're just simply seeing a pullback within the overall breakout. This is kind of like Honeywell. Going back to Honeywell, it's breaking out. It has been breaking out. It saw a little pullback within the breakout. Now it could be a dip buy within the breakout. Same thing with Johnson & Johnson, right? This thing got very hot from 155 to about 175. That's in the span of a month and a half. It ran 12%. Now it's sold off from 174, 175 to about 167. It's down 4.2%. And we're seeing a little bit of consolidation above the 180 SMA. Nothing crazy, but we are seeing some consolidation there nonetheless. So if we do get buying pressure up towards, let's say, 168, maybe 160, maybe 170 plus, let's say, that's going to be a good sign that this is continuing. A breakout towards 180 could be around the corner, and it makes sense considering, again, we've been seeing the rotation out of growth into value, and J&J, let me tell you guys, it's not a growth stock. It's more of a value stock. So watch out for J&J, Applied Materials, Verizon, Caterpillar, Honeywell, which is H-O-N, and we have Goldman Sachs. And as always, we're going to be talking about stocks every day on this channel, so make sure to subscribe because we have a lot more content to make this week. There's a lot of earnings reports this week, and I'm sure there's going to be a lot of breaking news and a lot of breakout stocks, that's for sure. So make sure to subscribe, hit the like button, and drop me a comment. Let me know your thoughts. Make sure to join my Patreon as well if you want all my buy, sells, call outs, morning update videos. No joke, guys. If you want to see everything I'm doing, more access to me, all my call outs, all that good stuff. Patreon is the way to do it. Check it out down below or go to StasserFest.com/Patreon. Make sure to also get your $50 free from M1 Finance. Use my link, deposit $100 with them. We each get $50, and you guys can get 2 stocks from Webull valued up to $1,600. Link down below. Deposit any with them, any amount of money. We each get 2 stocks, and that's it. I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the market. Stay safe out there. Peace out.